What is up, traders? Welcome back to our channel here at TRADEPRO Academy, and boy do we have a video for you today. I'm going to be breaking down how to have pinpoint precision entries and improve your entries on the Nasdaq futures using order flow and specifically the footprint chart. So if you're wanting to improve your entries and get better entries in the Nasdaq futures market, this is the video for you. I'm going to be breaking down what I'm going to be looking for, how it's going to be qualified, and I'm going to show you the good, the bad, and the ugly of trades that I've taken, the good ones, the bad ones, and how I improve them and look to improve them in the future based on these order flow concepts. So let's get ready for this video. I'll see you guys on the other side, and let's take a look at this screen right after this intro. So first and foremost, if you guys want this footprint and you want some of these chart books, you can check out community.tradeproacademy.com, our open Discord, where you can find these chart books that are available to you there. And you can ask me, right, if you need some of those chart books, just let me know in Discord. So again, community.tradeproacademy.com, 100% open. So when we're talking about Nasdaq and the footprint in general, what is the footprint? The footprint that I use is a delta-based footprint, meaning that we have delta that accumulates here, which is on the side, these bright numbers that are on the side of the footprint. If we zoom in a little more, you can see them probably better. So for instance, you can see these bright numbers that are coming up, and there are dark numbers as well. For example, 224.67, right? These numbers over here, these are the delta footprints that I like to use. The numbers in the middle right now, I'm not going to focus on those. I'm predominantly focused on the actual delta that is created on the footprint itself. This is a 12-point range chart, so that means every 12 points you're going to create a new footprint candle. So it's not time-based. You can make it time-based, but the predominant factor here is the delta itself, right? Delta is going to be the difference between traders at the ask and at the bid that create a blue or red number, right? A positive or a negative number in general. So the negative numbers are seen as aggressive market selling, right? They're coming in, they're hitting the bid realistically, and they're kind of passive buyers going through. And then you have the blue positive delta, which is aggressive, right? Offer lifting, right? Aggressive market buying, quote unquote, right? Passive selling going through. So the way that I view this is that on the Nasdaq, to pinpoint entries, I want to look at imbalances. Imbalances are very bright areas of large orders that are, well, in theory, imbalanced. They're imbalanced because they're large orders that differentiate themselves from the regular orders. So there is a setting to do this, right? And again, it's available in the chart book itself, but what I'm looking at is predominantly bright red and bright blue figures and how they react with one another. So order flow is about reaction, the speed of reaction. That's exactly what I'm going to be doing to identify the potential of an entry at an area. When it comes to the Nasdaq, what you see in terms of red and blue bright numbers can suggest different things. So what I'm looking for in terms of entries is the clustering of these imbalances that create a directional move with strength and speed. So what I mean by that, with the Nasdaq footprint, what I've noticed a lot is that when you have a lot of aggressive negative delta, red delta into a low, and it's completely piling in, people are hitting the market orders, right? They're going in, market into the bid, and there is the idea of aggressive selling and passive buying coming through. So these guys get clustered, and the idea is with multiple tests of those areas, with multiple clusters of all that red brighting up, I'm looking for the long opportunity in that. So when I find clustering, so when I see the first large negative delta coming through, I want to make sure that it's real. So if it comes back to test it again and it shoots up and creates more clustering, the more clustering at slightly higher prices, the better it is for me to look to pinpoint that entry. So with that, right, I'd be looking at this area right here. Once these guys come in, I have about 842 on the Nasdaq futures. That looks like my entry for the long side. Now, a huge caveat is that right here you have this monstrous blue positive delta, which is an aggressive market buy order pretty much, which is hitting the offer. or I should say lifting the offer that's coming through, that's trying to pull prices higher. These are more rare, so you don't see them that much. You don't see massive blue positive deltas that are hitting the book like this. And when this happens, this is a very, very prominent idea to identify an entry for the long setup in that region. So like obviously they happen up here, but what I'm talking about is a specific area where I'm trying to find a bottoming out. Because when you look at Nasdaq in this situation, it's falling off a cliff, right? It's dumping pretty aggressively, and all of a sudden, right, like huge sell, 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 sell. And then all of a sudden someone comes in and buys a shitload down here, and they start rotating and creating a clustering of absorption towards the low. I can look at that and say, okay, realistically, my entry should be somewhere over here where these clusters get created. That's how I want to pinpoint that entry from that long. Now, I tried to get filled on this, but I couldn't. So there's an instance from yesterday, actually, when I'm looking at this, and I had a few decent trade ideas, but the issue was the entry wasn't that great. So what did I look at, and how can I realistically get better at this, and how can I come back from that? I looked at this area over here on Nasdaq and I shorted it, right? I got stopped out of a few points from the high. I got long here, I got stopped out at the low tick almost. I got long here, I got stopped out at the low tick almost. So clearly my entries weren't that great, but over here, right, I pinpointed a much, much better entry for that long continuation to come back and get back into the game. So what's the differentiator over here in terms of bad entries versus good entries? And there's another trade over here into the highs of today's session that I want to break down, that we had a fantastic trade. And even if you missed that exact top, because I was like 5 points away from the top on this trade, which is barely any heat, right? How can you actually get into that? So first and foremost, let's look at the bad trades and how to actually create good opportunities and good entries from those areas, right? What was the missing piece? What did I miss out on that? So again, let's review really quickly. If I'm a buyer and I'm trying to pinpoint a long entry on Nasdaq, when I start to see the clustering of all this negative delta building up, it's creating absorption into this area, right? I want to see the first test, okay, second test, and then I start to get confirmation. A few tests of this is equivalent to like a rebid that you might see on the DOM. So I'm not looking for the first big negative delta that comes in and boom, that's me. No, I want to create the accumulation of multiple tests and seeing these guys rotate in that area, adding into that absorption criteria for me to get long. And I can pinpoint and say, okay, realistically, my entry should be somewhere here with these negative deltas, which is around 544 in this instance, right? Where if I'm using about a 20-25 point stop, that shouldn't really be a concern. So I don't want to look at every single delta individually and say, oh, okay, this is a long, this is short, this is a long, this is short, because you have a seller here, no one reacts against them. You have a buyer here, no one reacts against them, right? You want to see the accumulation, the formation of multiple tests of absorption that are getting created at a specific area so that you can have that pinpoint entry. So if I'm trying to get long, I'm looking at a bunch of negative deltas coming in, and ideally, if there is some positive delta, which again is a little more rare into a bottom, that really helps shoot price up, and I want to pinpoint that so I can get long with them. On the sell side with Nasdaq, I want to pinpoint an area where there's a lot of accumulation of all this positive delta getting absorbed and stuck into that high, right? And ideally with some aggressive sell on multiple rotations so I can get short into that area. So for instance, if I'm looking at this, this is shaping up to be a decent long. Now over here, if I say, oh, okay, I see a lot of people that are getting quote unquote absorbed into the highs and I see a big seller. Okay, that's fair. But when I come back into that area, are they rejecting them again? Not necessarily, so I don't want to take that short. Also, it is area dependent. I base my areas a lot on the auctions and the auction theory around it. So if I'm looking at this instance over here, I have an auction extreme at about 680. So this was my first entry short on yesterday's move on Nasdaq, but where I got stopped out. So if we go into this, right, I start to identify the idea of the potential short. I see this big, big, juicy positive delta that gets rejected. These guys are getting stuck, so they're holding support. So I wait a little. I want to see, okay, what happens? Okay, there's another big seller that comes in here aggressively, and they hold it out. So for me, that's what triggered the idea of me wanting to get short. However, my mistake was I got short somewhere here at 670. So I'm thinking, okay, my stops are pretty much protected. What I could have done better was, one, either wait for more confirmation, because the more they accumulate and absorb into the area, the better it is for me, because then I have a higher probability of actually getting in on that trade. Or I could have tried to actually enter around 680 towards the tops of these rotations to get a much better trade in that sense. So if I got in there, I wouldn't have gotten stopped out. But if I waited a little longer, I would have started to see, okay, there's the accumulation overall, right? You have some sellers that are pressing, buyers that get stuck, they push back down on the sell. I can start selling again at similar areas, but with a little more confirmation. So this one was a bit iffy. I wasn't really looking at this and thinking, well, I could have gotten a better entry if I just been patient, because that's the only thing I have real time. That's the only data I have real time. In terms of the long over here, you can see this long. 2 longs, I get stopped out at pretty much the low tick, right, on this chart. 2 longs, I'm getting stopped out nearly at the low tick. And I'm looking at this, reviewing it, thinking, okay, what could I have done better with my entry? I could have waited for more of a qualification in terms of these guys actually getting absorbed. So my issue was, I saw this big negative delta, it spikes up, there's a rebid against it. So I start getting in, right, at 618. My stop is somewhere down here, it's a few points off the low. Instead of doing that, what you want to do is, okay, you see the accumulation, wait for another person to get accumulated and then rip against it. So this guy comes and they react against it and they hold the sell. So I don't want to be long in that area. Instead, when they accumulate like this, now I know over here around 600, right, there's a possibility of me getting in. So I want to see, can they accumulate again at that 600, because it's at a slightly lower low. So I don't want to be buying into something that continuously sells and reoffers and reoffers. I want to make sure that I'm there with the buyers that keep rejecting it. So I have eyes on 600, another big offer. Okay, now there's some buy side pressure. Okay, there's a sweep up. So now I can look at this and say, they're actually holding against this accumulation. I can get long 590, right? Instead of me getting long slightly lower at 610 this time, I could wait for the accumulation, say, okay, 590 looks very reasonable because they keep getting stuck and there's a lot of negative delta that's building up here and they keep pushing back up against it, right? I can wait for that confirmation and say, okay, realistically 590, 595, maybe even 600 is going to be a decent area, right? So there is the entry, right? Based on these guys rebidding and getting super stuck, rather than me seeing only the first indication of a seller or someone getting trapped or absorption, whatever the case is. Instead of me looking at the first imbalance that comes in and thinking, oh, okay, they rejected it, let's get long, wait for the accumulation of those imbalances and then pinpoint that entry, right? And then it rips like 100 points. And I'm looking at this and I'm like, oh my God, wow, I just missed that by like 3 points of a stop. So very salty. I didn't like how that shaped up. And then finally, I got this nice little move here on the long side, closer to about 660, right? So around that 660 area, I know I have a region around 670 where I'm waiting for the accumulation. So I can see over here you have an accumulation, they try to push up, they pull down, no one else gets accumulated, so this guy gets accumulated, they push up, big, juicy buyer, right? Massive buyer, that is me. I'm trying to get long into those like low 660s into that area, right? This, when I see this big buyer against all of that selling, I want to get in with that, right? I can have my 20, 25 point stop. And then this guy gets stuck, triple accumulation, and then I should be good with this trade and we eventually get this larger expansion. So when I wait for multiple tests of the accumulation, of people getting trapped, people getting absorbed, and there's actually rejection from that in the direction that I want to trade, I have a much higher probability of actually getting the trade, getting filled, and not getting stopped out so that I could have a more precise entry. Is the same concept as today into the late morning session when we were looking at this and I was trying to pinpoint, I couldn't get on the long. I tried to get long like I showed you guys at that 840 on Nasdaq, which was a perfect long with all those buyers. I just missed it by a few points. It happens. So instead I was looking at this and thinking, okay, we're at a balance top, we're at an auction top. If I start to see the accumulation of buyers getting trapped with aggressive selling, that is what I want to do. I want to short that area to look for the downside. Because if I look at this and I see, oh, there's a there's a huge positive delta continuous, but no one's rejecting it. That's not enough for me to say, oh, okay, these guys are getting stuck. I see absorption, I'm gonna sell this. These guys are just continuously allowing prices to push higher, and until they accumulate all that positive delta and actually hold out against it and multiple reoffers come in, I don't wanna be a part of that. So eventually this happens, these guys reoffer, I start getting into the trade, right? Maybe a little premature. They reoffer again and they leave behind huge negative delta. So this is my spot. I know now between 0.50 and 0.40, it's a 10-point area, but I know in this area over here, I can get short, right? I can get short with my stop a bit above these highs, and there's most likely going to be a rejection from that area because, number one, we're at an auction top. Number two, we're finally seeing for the first time in this monstrous rally, sellers actually reoffering against the buyers and absorbing the buyers into the highs. So I was a little nervous here with these guys coming in, right? I'm like, oh crap, that doesn't look great. But the key factor is we have the area outlined where everyone's trapped, absorbed, and a lot of aggression on the reoffers coming through. This is the spot right here with this negative delta against the positive delta. I can sell these areas as well and still anticipate a larger move to the downside, right? I can look at this, and when this big seller comes in, when they reoffer this aggressively, now I have way more confidence with these incremental lower lows continuing that I'm on the right side of this move. So there is a little complexity to it, and it involves a lot of patience if you want the confirmation, but I think that this is a nice visual component that you could add into your order flow repertoire. Rather than bleeding your eyes staring at the DOM, you can have something that's very visual that gives you these imbalances. And remember, you can get this chart book at community.tradeproacademy.com. And if you want more videos like these, maybe how to find targets or how to trail or how to read the footprint more so, drop a comment down below, hit that like button, hit that subscribe button, and I'll see you guys in our next video.